Okay, so the way I wanted to start this was actually by looking at 2008, and the reason I wanted to do that was I always think it's good to remind myself and remind others that the market rarely goes straight down. This is 2008 here, and we had a very rough start to the year. The worst start to the year that we've had now is the worst start since 2008. And look at this. We went from March, to June. We went up three almost straight months of pretty much just grinding higher. In here, you got another month of grinding higher, and then we kind of fell off the cliff. If you look at the SPYs, it's going to look like the same thing, where right in here, we had a little double bottom. We chopped around for a couple months. We went up for 3 months. We went down for 3 months. We went up for a month, and then we fell off finally. So it's just to remind people. Now, obviously, we are way more extended up here. There's a lot other stuff going on. There's more headline stuff going on. There's possible recession and war and yada yada yada. But it's just to remind people, so because we're getting a nice little run up here in the market, that the market rarely goes straight down. Even if I zoom out towards COVID during a pandemic, we still had up moves, and even though the drop was very quick because it all happened very quick, we still had a week where we went up. We gapped up several times. So there can be shakeouts. It's not just like just short and walk away. I mean, it can be if you got a thesis and you're just going to hold it for months. We have a couple of viewers who are doing that. But within there, you get short squeezes, and some of the roughest rallies and some of the roughest pop-ups are during bear markets. And so that's kind of what we saw in here over the last 3 days. Obviously, we got through this trend line on the SPY. We've gotten through some moving averages here. We're approaching the 200-day, and it was kind of a shout out to I think it was like Mark BTW in our chat, who said, "Oh, I'm looking for 445." On Friday, and yeah, he got 14 cents off. Not bad. Not a bad call out from Mark there, but it doesn't surprise me that we got up here because this market is so insanely short. It's so insanely short bias. It's aggressively over leveraged, and when you get some moments of rest like this and short start covering, it can cause a little bit of a rush for the exits. This does not invalidate the long-term short bias if you think that we're having a recession, or if you think that that the longer that this goes on, the war in Russia-Ukraine goes on, the more pain we're going to feel. Absolutely, this is all still still out there. That thesis is still relevant. And then actually, let's keep it to a daily, and then keep that on top of, we're still very, very elevated up here. We've had a hell of a run for 2 years, so there is still a lot of reason to expect us to potentially continue to pull back into this range down here. But it's just to show people that you can't necessarily short at lows and not expect to feel any pain. Same with buying at highs as well. It's especially in a market right now that's driven by headlines and completely whipped around, over leveraged. So it's just something that we need to remember as traders. So SPY got itself up here. This is, obviously we'll see where we are by tomorrow. There wasn't, in my opinion, enough headlines to really send us anywhere necessarily based on headlines over the weekend. Russia-Ukraine stuff still going on. Market's getting a lot better at digesting that. So unless we get some kind of drastic headline, I don't expect much out of a move from that. So if we open up about where we are and where we closed, we'll see if the buyers are still in control now that we've had a weekend of rest, or if the shorts reinitiate, because we're sitting in this 200. If we do break through this, I mean, your next resistance is probably going to be about this double top on the SPY here. And then if we keep pushing through that, then this is a hell of a short squeeze that we're seeing at that point. And only the diamondest of diamond hands is still going to be holding. Qs obviously weaker, nowhere near their 200-day, but we are pushing into the 50-day. This is going to be a really important inflection point here, in my opinion, in the Qs. Kind of this little bottom from October. You had it in the summer. It was also a bit of an inflection point this year. We played below it. We played above it. So definitely watching kind of around this 353-ish. It's just above the 50-day. If we get above that, then you need to be really smart with your short entries. This is definitely a good spot if you're short biased to be watching to reload, in my opinion. But you obviously can't be shorting into this pop too aggressively because you don't know when that short squeeze is going to stop. So IWM is actually almost back into its year-long range that it did yesterday. This was kind of the bottom of that range. This is where we've topped out at now. So this is definitely a spot to be watching. This is definitely going to be a pivotal week for the shorts, at least the paper hand shorts, to see if they get blown out and squeezed out, or if we hold here. This has been a bit of a short squeeze. Don't get me wrong. We saw a lot of people already covering positions and hedging positions because we had the Fed last week. We had quad witching. We had a lot going on. So people had already kind of gone a little gamma neutral. Now we've just had our quad witching. A ton of options have expired in the market. And so now you've kind of got almost a clean slate for people in some ways. So we may see those shorts reinitiate if we don't get that pop. But I think I'm definitely going to be very hesitant on Monday to make sure I see what we're getting. And again, we're also beholden to headlines, so that's something else we got to keep in mind. VIX obviously, it has dropped off pretty dramatically. We assumed that this would be the new kind of bounce point. 15 was our level last year. Now it's definitely at least going to be probably around 2050. We'll see if we even get down there. If I go to the other volatility indexes, they'll look about the same. Although holding a little better. So this may be a spot where we see some support on the VXN, RVX, same kind of thing. So volatility is doing the same kind of thing out there. So that's really what we're looking. Now, obviously with the Fed, we got exactly what we expected, that 25 basis point rate hike, a little more hawkish on the dot plot, but the market didn't really seem to mind that too much, which is also why rates didn't really go anywhere. We ran up going into the Fed, and then that was it. We just kind of stopped. So it's just, again, another great example of the market being a forward pricing mechanism. If you're buying something after the news comes out, you're likely too late because everyone else who assumed properly is already in and positioned themselves and are likely selling to you. But market continuing to price in Fed policy error most likely. We've got inversion on the 3 to 5 year curve, the 3 to 10, the 5 to 10, the 7 to 10, the 20 to 30, pretty much across the board, all inverting. The only thing that has inverted is the ever important 2 to 10, which is kind of the one that a lot of people look at. That's still about 20 basis points off. So that's certainly something that we need to keep watching as well. And the more that Russia-Ukraine goes on, that's also going to be hurting because now we're starting to really feel the pain we're going to start to feel the pain in terms of food supply chains. And we've talked about this before already, especially with fertilizer bans going out, wheat bans going out. Especially in countries, more impoverished countries, that are going to really feel that pain. There's going to be some serious food supply chain issues. And now on top of that, you've got issues like the NOAA talked about some mega drought in the West and Southwest U.S. further impacting supply chains. You've got China closing up their trade because they have shutdowns and factory shutdowns and so on. So it's going to be it's definitely going to be interesting to watch. It's something that we need to watch, but that's kind of more sector specific. One stat that I saw was that a lot of portfolios out there, long-term portfolios, large funds, whatever, will run like a 60-40 bond to stock split type of situation, because you want to hedge yourselves. A lot of people like to, hedge from stocks into bonds and so on. Well, this has been, don't think that bonds have been safe for you. This is the high yields right here, HYG, look at JNK. This has actually been the worst start for first, not only the market since 2008, but also a 60-40 bond stock portfolio split since 2008. And if you were 50-50, 50% in stocks, 50% in bonds, worst start ever for you in those kind of portfolios to the year. So also kind of maybe a reason that we're bouncing because I'm a bit of a mean reversionist at heart, so you got to keep stuff like that in mind as well, that sometimes yeah, we have the worst start, but a lot of times you're going to get that covering, you're going to get that pop, whatever. So that's really the majority of that. China lockdowns are easing a little bit, Shenzhen reopening, but it's still largely shaky there, so we'll have to see how that continues. Yeah, there's the new COVID strain. I haven't seen anyone report anything other than milder than Omicron. So if that's the case, I don't think we have to worry about COVID headlines taking back control in the markets. If that narrative changes, that's just another thing to add on the headline list. But I'm not expecting anything from there. And that's the majority of the market headlines, frankly. This week is going to be really quiet. You have Red Book store sales on Tuesday, new home sales, and a 20-year bond auction on Wednesday. So it's going to be just super quiet. Thursday of durable goods, jobless claims, PMI composite flash, and Friday's consumer sentiment and pending home sales. So not really a sexy week after what we saw last week comparatively. So that's good and bad. We'll just be beholden to any other foreign headlines that we get, and we'll have to see how we can do in this last full week of trading for the month. So if someone puts a gun in my head, I think we could possibly wick a little higher. Looking at how volume didn't really spike up that much over the last 3 days, it should tell you that there definitely could be more short squeezing if people really did try to put on the pain. I don't think that's going to happen, but again, a headline could erase everything we're talking about today anyway. So I'm going to keep all that with a grain of salt. Looking at some of the commodities out there, because we're still it's still something to watch. Obviously, oil and gas. There's no reason to think that oil and gas is going to really be cratering anytime soon, unless we get some kind of serious headline. Obviously, we got to listen for the Iran stuff. That's still in positive talks, a positive direction. I've heard nothing new or positive from Venezuela in terms of easing their sanctions and dipping into their oil. But we're having a little bit of a pause up here. We'll see how that continues. We did have like Poland suggesting that EU should just cut off all trade with Russia. So if that ever were to be put on the table, you'd probably see oil just explode again. But we'll see. Gold, meanwhile, kind of chopping around. It was a little weaker than I was expecting. And I was a little surprised. Yeah, I know the market's strong, but still, we talked about that lack of return from bonds, the lack of return from stocks. Kind of makes you think that gold would be the one on the table there. But and it is stronger right now, obviously, than it's been. But interesting to see that weak Friday. So I'm a little hesitant on gold. Definitely going to be careful and watch. And I guess with rates being so strong, obviously, we've seen the dollar kind of hold up here at highs as well. But I don't really have much analysis on dollar in here. It's just in a range. It's just chopping, and it'll likely continue until we get any kind of headlines to move it out. Crypto, I'm still watching. I think this week could be the week for crypto. I'm gonna say it. I'm gonna be the sucker. I'm gonna be the one to say it. Fool me once, shame on you. Fool me twice, shame on me. But it's been wedging in here since December. These lower highs, it's been kind of tightening and coiling, getting really tight in here, and you don't have the return from anything else. I mean, market is squeezing a little bit, so maybe that's putting a little bit of risk appetite on for crypto. And obviously, you've got a lot of resistance up here, kind of sitting around this 45,000. But I don't know. I'm just feeling something. I don't know if it's intuition or digestion or what, but Ethereum definitely is the leader here, and it's something that you always want to watch because Ethereum lagging has been something to watch, and has saved me from being baited in once or twice on crypto. But Ethereum was strong on Friday, so I'm thinking this could be good. Now, Ethereum did have headlines. They had like some kind of big test for what's supposed to be Ethereum 2.0, essentially some kind of big update. That's not going to be happening for a couple of months, but they did a huge stress test and a huge test, and apparently everything went well. And that's supposed to do things like cut down Ethereum's energy usage by like 99.98% and like do several other things that's supposed to really transform Ethereum. So it could put crypto further on the menu there. I'm just, this is definitely a week that I'm watching this. I'm going to be watching this very closely. And then lastly, this isn't really, I can't pull up the nickel markets, but I saw something interesting. There's probably not a trade in here, but, we all have talked about the London Metal Exchange completely botching the nickel market and all the disaster they've had there. Well, Goldman has apparently stepped in to help, because they're so generous. Benevolent Goldman coming in to help make the market on nickel. Now they're only doing it with a $5,000 spread between bid and ask, but they're benevolent. They're doing this for the little people. So Goldman, I saw, was stepping in, helping make the market in nickel. I wonder if they're going to make a huge chunk of money on this or what, helping traders get out of their positions or initiate positions for a nice hefty spread. But it's just something that's interesting. I'm still going to be watching the news on the nickel market this week because they still haven't figured that shit out. They've had to halt nickel like twice or three times since the like week or two long halt that it had. So it's just funny seeing kind of the craziness that's going out there since I'm not actually invested in it and have to worry about it. But it's crazy. Taking a brief look at some of like the stocks and some of the personality of the stocks that we saw in play last week because it was pretty interesting. First, I want to just give a brief mention of quad witching because I'm not going to go dive into this. This is a whole another separate topic, but I saw some crazy stuff, and this is why I always tell people about how crazy things can get on closing imbalances and so on. Shopify, for example, if I show you the intraday here, was just simply trading higher, and it was trading up to about 690 or so, and there's your closing print. at 780. So you would have made a nice 100 points on Shopify on the closing print if you played imbalances. Verizon, and it shows up on the daily because that's technically the closing print. But if you go to the intraday, Verizon was just sitting at around 52 going into the last minute. I guess people realized, oh God, this thing still hasn't paired off its imbalance, and so it started tanking. That got you 50, 80. Colgate, printed down at 72.20, so another 2 points down. There was a lot of that actually that went on, so it was pretty crazy to see something like that. It was a lot of not chaos. I mean, it's largely expected, but that's just some of the craziness that you can sometimes see. So if you're ever looking at a daily chart on a day like an options expiration, that's the closing print there because the market makers couldn't fill all the closing orders except at that price. That's the best price they could do, and it's just interesting now. So I just thought that was interesting. Some stocks that I saw that I'm still stalking on the longer term perspective. Just to look at a daily chart here. Walmart's obviously one that we've talked to death. I'm not going to continue to beat a dead horse here, but it's holding up here nicely at the highs. High inflationary environment. I'm expecting Walmart to do relatively well still. If Bitcoin's going to continue to go, I like Silvergate Capital. I just like the chart mainly. I also like that they own Facebook stablecoin. I like that it's poised to break out. It's also a bank, very crypto heavy bank, so you kind of have it going with financials as well, which have been picking up with rates and so on. Kroger is still interesting to me. It's really just flagging in here after kind of going momo after its earnings. So I'm going to watch Kroger, and if I zoom out a little, you can see we've had a very kind of long-standing loose trend line that we're kind of trying to break out of. So I still think that Kroger could have its some further time in the sun. We'll see. Lithium kind of looks interesting here, and it's a stock or a commodity I haven't really traded in a while, but I'm going to keep an eye on it here. It's one that hasn't really participated with all of this craziness, but if it starts approaching 30, maybe it'll be its turn. EV's not really in play right now, but it's still, watching some of those lithium plays might be on the table for me. Mike's Caterpillar, I'm sure he's still watching a lot of these industrial plays. Caterpillar flagging up here. Nucor really wedging up nicely into 52-week highs. Some of these actually look pretty good. I'm not playing them necessarily, but they look good. Obviously, our boy Tesla squeezed up into kind of these descending highs up into 900 the 50-day. I don't expect this thing to get back over 1,000, but you never know. I think that if you're looking for the short, I'm sure some of our viewer Mauer and several others will be salivating and watching those puts if they can. Visa had a nice pop, and this is interesting. If you think the market's going to roll back over to lows, definitely these are going to be some of the plays I'm looking at. Some of the ones that were just getting the hell kicked out of them and just down in lows, down in the dumps. If nothing's fundamentally changed about them and their environment, and I think the market could roll back over, these are going to be some of the plays I'll look at. So Visa, hell, I might even look at Nvidia. That one's really squeezing higher, a lot stronger than like AMD and Micron. So I might watch some of those guys. You did see the COVID plays run lately. I don't know if I'll short these necessarily, but Myrna's had a nice week or two. Pfizer's been really strong. Johnson & Johnson. Hell, healthcare in general has been very strong. Back up to some interesting resistance here. So this is going to be a sector I think that I'm going to keep an eye on because healthcare suddenly just completely reversed course and really started picking up steam. And that's not just from the COVID names. I mean, we've talked about AbbVie before. I mean, this stock's an absolute monster right now. You've got plenty of healthcare stocks that are picking up. MDT shook me out, so fuck that stock. DVA is holding in okay. UNH back up at 52-week highs. So you've got some healthcare stocks that are actually doing pretty well. So that sector in general seems to be pretty hot. I will watch the quote unquote Russian commodity sector, Alcoa and aluminum, fertilizer on MOS. These guys are definitely going to be in play. We'll just have to see in terms of if we get headlines which way that is. CLF or Oxy or whatever energy play you want to watch. Hell, maybe even a stock like INDO if it keeps popping back up for its dead cat bounce. So any kind of commodity play is definitely going to be on a check every day list for me personally. So we'll see what we get there. And then last but not least, there's going to be plenty of day trades out there, obviously. The bottom feeders all kind of got picked up. So like Roblox had a hell of a nice couple day run here. I mean, it could frankly continue if people are looking for something to trade. Rivian had a nice little breakout from its lows. I was looking for anything, that was getting beat down to get scooped up, and a lot of it did, frankly. A lot of it did. Hell, even Didi. I mean, it's Didi. This stock is like borderline delisting in a trash company, and they ran it from, 100% almost. So this just tells you the kind of squeeze and buy everything mentality we had last week. So those are going to be some of the plays I'll be watching. I'll definitely watch China plays as well. They had a nice little dip buy off the lows here. Obviously headline driven with China, kind of cutting back on cracking down on its companies. They could be good day trades if because I'm sure there's a lot of people very heavily leveraged on both positions directions on them. JP Morgan saying they're uninvestable at the bottom of the chart there. So that's pretty interesting. And then last but not least, I'll watch VXX. We likely won't get anything, but remember it's decoupled more or less from volatility, and so you might get some further craziness, some divergences. So I might watch something funky like that, and then obviously we'll get whatever happens during the day. But that's going to be it for me and what me and Mike are watching, what we're expecting. It's going to be a fun week. It's going to be a quiet week, hopefully. So you might see volume ease up a little bit if we're lucky. A little bit of a hangover maybe from last week. And again, Monday especially, if you don't get a good headline for tomorrow, it might be just a nasty chop fest because that's kind of Mondays usually anyway. But we'll see. It's gonna be fun, but I think that's really it for what I'm looking at on the week. So.